What is up, brothers? Welcome by the live stream. Today, I'm gonna explain the first thing, so that's market structure. I will first just get into market structure, and after that, we just do live trading. This is how I'm gonna do it. I'm not gonna make videos, edit it. No, I'm just raw live stream talk about market structure. So market structure is the first basic principle that you need to know if you want to trade. Market structure overrules everything. So let's just start with it. I'm currently having the Bitcoin chart on a 12-month time frame. It doesn't matter if you are on low time frame. It doesn't matter if you are on the high time frame. You always start on the highest time frame possible. Now, what do I simply see right here? This is not valid market structure. For valid market structure, you need 2 consecutive candles trading higher than each other up. You need 2 consecutive candles trading lower than each other down. And you need 2 consecutive candles trading higher than each other up. And what do we see between this high and this low? There are not 2 bearish candles trading lower than each other. So this is not valid market structure on a 12-month time frame. If I then go on a 6-month time frame, we see that we have from this low, like this is not a market structure pool, but from this low to this high, it is a market structure pool. You see that we have 2 consecutive bearish trading, 2 consecutive candles trading lower than each other right here. And we have 2 consecutive candles trading higher than each other here. So this is valid 6-month market structure. So if you're going to talk about the highest valid time frame market structure, it is this. But what do we always like to do? We always like to dissect market structure in different market structure legs. So right now on the 6-month time frame, we cannot see market structure between this low and this high. So we need to go how we just did on the 12. So we just did go from the 12-month to the 6-month because there was no valid structure on the 12-month. And now we go from the 6-month to the 3-month. And maybe we see 2 consecutive candles trading lower than each other in this leg between this low and this high. And then we have new highest time frame market structure between this low and this high. So right now, let me delete this, or let me actually put it in a folder. 12-month market structure. Then we can put it off. And now I'm gonna dissect the market structure between this low and this high. So let's do the 3-month. You see we are getting pullbacks, but this is not a bearish candle. This is an indecisive candle. So if you go on this time frame, you cannot even see if this is an bullish or a bearish candle. So indecisive candle, so where the close is around the open, it's not valid for market structure. So on the 3-month time frame, you don't have valid market structure. This is just one pool. Now, then we can go to the 2-month. We also see in this whole leg, not 2 consecutive bearish candles trading lower than each other. So there is no valid market structure as well in this 2-month, on this 2-month time frame. Now, then I go to the monthly time frame, and what do we have? I just start from here. I see right here, we have 2 consecutive candles, bearish candles trading lower than each other. So this is a very valid market structure pool. Then we have 2 trading higher than each other, all the way to here. And right here, this is not a valid market structure pool. Why? Do you see 2 consecutive bearish candles trading lower than each other? No. So this is not a valid monthly pool. So your valid monthly pool is right here. And then you can extend it to here. Because here you have 2 consecutive bearish candles trading lower than each other and 2 consecutive higher. So this is currently your monthly market structure low. So we are breaking monthly main market structure if we get a monthly candle body close below this low. There's no structure in here. This is your current monthly low. And what I just did on the higher time frame, I went to lower time frames. If we can see if there's a market structure valid on, we're going to do the same between this low and this high. And then we're going to see what is the market structure that we have going on in there. So let me go on a 3-week. I do not see 2 consecutive bearish candles trading lower than each other. 2-week, you have 2 consecutive bearish candles, but like this candle took out the previous candle. Let me actually zoom in. Yeah, so this candle took out the previous candle high. So this is not valid a 2-week market structure. It needs to be 2 consecutive candles trading lower than each other. So then we can go on the weekly. You can argue that this is an indecisive candle, so this is also not weekly market structure. Then we go on the 5-day. Also not 2 consecutive candles trading lower than each other. Here we have. So this is your current thing that we have going. But we didn't have a market structure close below this low. Market structure closes. I will go in the second stream about market structure closes, but I can quickly say, how can you change market structure? Is getting a bullish close or a bearish close at that certain time frame where you have valid structure on below the level. So currently we have a wick. We have a wick. We have a wick. That is not a market structure close. That's not a market structure break. You need a candle body close below this level on the 5-day time frame to switch the trend. That did not happen, so this is not a market structure break. This is what we call a swing fail. So we're swing failing our market structure point. So what is our new market structure low? This is your new market structure low where we need a 5-day candle body close below, and then we can say the trend is shifted. But right now we are swing failing it. If you swing fail something, you need to watch the highest time frame market structure between this high and this low. If we start breaking the highest time frame valid market structure between this high and this low, we can make a run up to this high. And that are simply just market structure rules. I'm now not talking about the PO3 that we have going here. I'm just talking about market structure. So market structure is the first essential thing that you need to understand, and then we can move to other things. So right now, these are the basics for market structure. This is everything you need to know. It works the same on the lower time frame. On every time frame are the same rules apply. But what you can have, for example, a higher time frame market structure pull down, and then between this high and this low, you have more internal structure, internal 1 structure. Then between this high and this low, you can even internal 3 structure. Between this high and this low, you can even have internal 5 structure. So, and you can keep going with that. So the more you get advanced in market structure, the easier it gets. But these are just simply the rules. And I'm not gonna overcomplicate it. I'm only talking for 8 minutes right now. This is simply market structure. I also said how you can get a market structure break. So you need a close on that time frame, a candle body close below or above the level. A swing fill is a wick, and that are simply the rules. So let me all know in the chat if it's clear. It should be clear. It cannot be more clear than this, and then we can talk about just normal price action. Right, guys, beautiful. That's clear. Now we can now get into live trading. Today it's Tuesday. Always nice to get Monday off the chest. Like market makers like to position on Sundays, on Mondays, and then they show their real hand in the next of the week. So we are having a 5-day textbook Bojan high in discount of your higher time frame range. So will this ever be in a high probability zone to enter longs? It is in high probability enter zone because it's such a textbook Bojan high without a valid accumulation here. So yes, you were showing signs of accumulation, but it was never a valid Wyckoff. So yes, this was the plus confluence for your longs. I took some longs, spoon-feeded every chart that I was watching. If you did not enter any new longs, guys, don't worry. I'm always saying, you're not missing out on anything. You're missing out on the skill. FOMO doesn't exist. FOMO only exists when you have a certain skill set and you were partying or you were chilling or you were with a girl and you were missing a trade that you had the skill to enter on. So USDT dominance, this is anti-correlated with crypto. So this was a major +1 confluence. I always say with the Bojan highs, the thing you want to enter on is the next candle open, wick to the upside, first signs of weakness, and then you can have a +5 confluence for your longs on crypto. Now, that's exactly what happened. Open, wick to the upside, signs of weakness in here, boom, down. So now I want to talk about the Bitcoin chart. We are having a textbook 5-day Bojan low. We had the wick to the downside that I also told you guys to watch to enter on the first signs of distributions, first signs of accumulations, or first signs of strength. I also took some long positions in here, not too crazy, because I'm already exposed. I'm currently 45% of my margin capital to the long side. My ADA position is currently fully closed. So my ADA position. So that's why I have some new capital that is free. Is it on here? No, it is on Maxi. So this position is fully closed. It was showing signs of distribution at initial target of the Wyckoff, and the RR was enough for me. It's fully closed, made around 12 RR on this setup. So if you would have risked 1,000, you would have made 12K. Currently, we are showing new signs of strength. You have, let me see. You have a 3-day Bojan low here, unfinished candle. So the move up will not be sustainable. The higher we go, the more confidence you can stack to short this. Also, I saw a lot of bullish news on ADA, that ADA goes to this, ADA goes to that. So it was enough for me to close. So Bitcoin, I think we have legs. Like the first long I took here was the hash ribbon trigger with the Bojan low, all the confluences. What we are simply need to watch right now is this new range from this high to this low. This is the range that we are having. I was first watching a range from this high to this low, but I do not like it anymore because there is no return to zone build up in here. The return to zone is getting built up here. You are seeing crazy liquidation wicks to the downside, so I'm not liking this range a lot, but I will still watch it. Why not? I'm in the long from here, took some longs around here, so I'm chilling either way if we go higher. I'm also still in a short here, only 25% open right now. So yeah, now is the time to be patient. This is a major level that I'm watching for shorts. That's basically your the start of your liquidity trail. So that's what I will be watching for shorts. Yeah, not really interested in anything else. I'm in a nice position on Trump. SHIB is also going for it, obviously. Yeah, so I spoon-feeded this chart also. If you know, you know. Beautiful to see. What is this thing doing? Mini accumulation. Not really interested in any new positions. ETH. Watching this new range for shorts. Initial range high, initial range low, no deviation. Not really interested in anything else. So yeah, guys, I think we have talked about everything. Let me know in the chat if there are still questions on Bitcoin, on ETH, on USDT dominance, On Trump, on total 2, total 3, Bitcoin dominance, ETH BTC. That are charts I want to talk about. I'm not going to talk about your 100 million volume coin. I want one of these. And guys, there's no reason to watch 20 different altcoins if you didn't even have the skill to master Bitcoin price action or ETH price action. First, try to take 10 good trades on Bitcoin and ETH with USD dominance confidence, with total confidence, with total 2 confidence. Then we can talk about all the altcoins. When you reference to valid Wyckoff, do you mean Model 1 or Model 2 Wyckoff? Both. So it is either a Model 2 Wyckoff where you have a hit extreme liquidity or extreme demand, or a Wyckoff Model 2 distribution where you hit extreme supply or extreme liquidity, or it's a Model 1. Wyckoff Insider, ETH, yeah, that's also a chart I'm watching. This is not the right chart. Yeah, that means something. We will definitely have a run on this, But we can still do this and then do this and then do this. What's your target for Bitcoin and ETH this cycle is not the right question. I'm not gonna answer it. The right question should be, do you have any mid-time frame POI zones where I can get into a long or a short position? That's the right question. Asking the question, what is your target for Bitcoin and ETH this cycle? Most people don't even understand what cycles are. Yeah, so NIPS, the technical target of the Wyckoff is always the initial point of the range. So if you're having an accumulation, the technical target is the initial range high. If you have a distribution, the technical target is the initial range low. Negative FIB expansions can just be extra confidence with your TPs. Hey, but the only domination Bitcoin hasn't broken 100K is GBP. Just a found for thought, something worth considering in your books. Yes, definitely an extra confidence, but it's not gonna give me a trade. Also with ETH Euro not did all-time high, it's not gonna give me a trade. Wyckoff is gonna give you a trade. Gone time windows is gonna give you a trade. Backtesting is making sure that you have the skill to enter the trade on. Guys, look at this 2-week unfinished candle. Beautiful. How do you decide how much time displacement you want for an accumulation or distribution? It all depends on the zone you're in, you know. If you are an extreme discount and you're showing some signs of accumulation, you can be way more aggressive on your long. But if you're an extreme premium pricing and you get some sort of an accumulation, it needs to be textbook. You want a 36 hours plus, you need to have the return to zone going, you need to break back inside the volume area, maybe an S to D flip or in D to S flip, and that's how you stack confidences. But I'm the person, I like to wait for the accumulation and extreme discount. Having all the confluences stacked with total, with USDT dominance, with stablecoin dominance, and then just go 5% risk. That's when you only need, like I only would need like one trade a week. I'm chilling. But like they are programming you that you need to take 10 trades a day, you need to take a lot of trades, you can play around with the 40% win rate with the 1 to 3 RR. No. We are humans. Our emotions can't handle taking so many trades. We are all over the place. Just stick to, eventually, if your capital is built up and you have the rules for yourself, you know your win rate is super high, just take one trade a week and take it with a few K risk and you make 10, 20K. But first you need to have the evidence for yourself. Like the Alex Hormozy quote, don't be confident in the mirror while you didn't have like the undeniable proof of the work that you are where you say you are. First do the work and then we can talk about taking the high probability setups with high risk. But if you didn't do the work, you don't have the skill, but you still have FOMO that you're missing a trade or that you're missing out on the alt season, it doesn't make sense. It's delusional. But guys, I'm going for a massage right now, and so I see you guys later. I will be going live again around New York. There are no trades that I'm currently watching. Trades are just sprinting, short, long, ETH is sprinting, Trump, everything is just sprinting. And that's why you need to wait for the high probability setup. You need to backtest. And guys, remember, you're not missing out on anything. I see you guys later.